Welcome back. Is the WeWork saga finally coming to an end, or could it be a fresh beginning? They filed for Chapter 11 bankruptcy to reorganize the business, including cutting leases. Stock, of course, has fallen almost 99.8% since listing in October 2021. It was a $47 billion valuation at one point. Now it has just about a $44 million market cap. Deirdre Bosa takes us inside that collapse in today's Tech Check. Deirdre, I don't know if it's over yet.
I don't think it is. We'll get into that. But I mean, just a stunning, you outlined it, stunning rise and fall that was really indicative of venture capital throughout the 2010s in a ZIRP era, a policy of zero interest rates, when everyone just clamored to get in, from SoftBank to JP Morgan to even in traditional VCs like Benchmark. And they were willing to sustain billions and billions of dollars of losses while it reached that peak of $47 billion. It would crash down to be worth less than $3 billion. And then what I think is just as stunning, guys, is that it was able to go public through a SPAC at a valuation of $9 billion. So in that way, the losses bled over not just to the institutional investors and the VCs, but to the ordinary investors who are going to be wiped out in this bankruptcy. As for what happens next, it's interesting because when you go back to the early days of WeWork, and I covered the company very closely, they really had a sense of community and they were doing something different. It all got out of hand through Newman and SoftBank and the billions and billions of dollars in growth at all cost mentality. But if you strip it away and you don't try to say that this is a technology company, which it never was, and you try to operate it like a great real estate company, you use the bankruptcy to renegotiate or end leases. That could be an interesting proposition, and one that, Adam Newman himself may even be thinking about. According to that statement he released, what he said, with the right strategy and team, a reorganization will enable WeWork to emerge successfully. So I don't know, guys. Chapter 11, there may be more. Maybe another chapter.
I think of that Billy Joel. Back. You ought to know by now. But nobody seemed to know by now. I mean, where does this money go, Dee? Does it go to money heaven?
A lot of it. Some of the debt is going to be rolled over into equity, and there's going to be sort of a frenzy as to what happens to it now. But it's not going to be anywhere close to the more than $16 billion at least that has been put into this thing over the years.
Did I see a comment from Adam Newman about all this, Deirdre, where he said it's hard to watch from the sidelines and they need something like, it almost sounded to me like the kind of comment where he said, if only the right person were back at the helm. And we've seen it before. We've seen founders go back.
And that was, think of the time that he was sort of thrown out of WeWork. That's when a lot of startup and some of the founders of the most disruptive companies, you think of Travis Kalanick, were pushed out, or, maybe deservedly so. I don't know. But they wanted an adult in the room. They wanted the operators. And it turns out, at least in the case of WeWork, that the operators weren't very good at managing this either. And so, that statement from Adam was pretty telling. He said that maybe with the right strategy and team, it could emerge successfuless. Rise from the ashes.
Let's move on to Uber, which has a story all its own. Gross bookings more than $35 billion in the third quarter. That's a big win there, Deirdre.
It is. And you know what, Tyler? I harp a lot, and I have for years, on Uber's different measures of profitability. First, it was unit economics, and then it was adjusted EBITDA. But you know what? This is a quarter which really relied on the fundamental business operations. And guess what? It was profitable on a net income GAAP basis. So credit where credit is due. That's a very interesting thing, and that could actually pave the way for it to be included in the S&P 500.
All right. Let's move on, shall we, to the kind of fascinating chapter here. Speaking of new starts or fresh beginnings, or I don't know what, OpenAI is launching custom versions of ChatGPT that can be tailored to specific apps, kind of like iOS or the Android platform. Deirdre, what do we know about this?
Yeah, I think you summed it up really well, and that is what has made Apple's iOS and Google's Android so successful into these walled gardens, these ecosystems. That's essentially what OpenAI tried to do yesterday at this developer event that some are saying, reminded them of the old Apple iPhone events. This is new technology that's available right now, and it really got a lot of people excited. So what an app store looks like for an OpenAI or a ChatGPT, it's where you can find different GPTs, as they're calling it, and these are third-party basically smaller models that companies put into an app like Store that people can use right away. And it's so interesting. You've seen all these examples on Twitter today, even of people experimenting, with them and showing what they can do. So in this way, it sort of gives us more applications, more use cases for ChatGPT, and potentially puts them in more competition with the AI bot platforms, like the one that Meta is building, or Character AI, which a lot of young people are spending a lot of time on.
All right. There we have it. Any other questions? No.
The gambit.
Deirdre, thank you very much. We appreciate it today.